All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Free New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful, as always, to be here with each and every one of you as we take a look at the technicals and the fundamentals in this Forex market to see what we can take advantage of. So let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So let's engage early. Drop me a one. Let me know that you can hear me loud and clear and that you all have had your coffee this morning and you're ready to get this session going on what is going to be a very important day, right, for the Federal Reserve. So, yep, I see all the ones coming. Joy waiting on the coffee. All right. All right, I got some ones coming in. Good. All right. So let's Carolyn. So let's dive right in because today we can see right here at 2:00 p.m. we have the FOMC, not only the Fed rate statement, but the economic projections and the federal funds rate. The federal funds rate this morning, which it's back and forth, right? It's kind of up in the air. I was listening to a lot of the Bloomberg Open this morning. I expected 25 basis points, but we shall see. It wasn't too long ago that the Fed was entertaining 50 basis points. But now, because of everything that happened with the bank situation and the little crisis that we have going on, 25 basis points to be expected. So what they're saying is, hey, we don't see a pause in rates, you know, um, because that would just lend people to believe that there's something that the Fed knows in regards to something worse that's on the horizon if they don't raise rates at all. But 25 seems to be sufficient. So we'll see. We'll see what the rhetoric is like moving forward. I think the market has already priced in 25 basis points, but it's all about the rhetoric going forward. See what they have to say, see if it kind of falls in line with what the ECB said during their conference. So, but that's at 2:00 this morning. Very, very important data out of the UK. CPI rose 10.4% for February. Okay, so the forecast was 9.9%. 10.4% it came in over forecast. And that's important as leading up for tomorrow. Not only do we have the Swiss National Bank rate statement coming out, which is expected 50 basis points, but we also have the official bank rate coming out in the monetary policy summary for the UK. So they're expected 25 basis points, but they're coming off of a CPI report that has CPI coming in at 10.4%. So that unexpectedly rose for February. So it's going to be quite interesting today, tomorrow, as we look to close out the week. And as we have on Friday, we've got PMI numbers coming out for the Eurozone and for the UK and for the United States. So this is a busy week. Hey, we don't wish for the market to go up and down. We just like movement. So I'm all good when it comes to the volatility. We just have to make sure that we are good managers of risk. So a lot of you that have been keeping up with the bank situation, you keep hearing over and over again the term risk management, right? A lot of times it comes down to how these banks were managing their risk. So as us as retail traders, we are no different. It is very, very important for us to manage our risk always, right? Preserve capital. So that is where we are on the fundamental front. If we switch over to looking at the trading economics, you can see just in greater detail, rose 10.4% in February from 10.1% in January. And this is the inflation rate. The first increase in 4 months compared to forecast of 9.9. Food inflation hit its highest since 1977 due to shortages of salad, produce, and other vegetables. Upward pressure also came from the price of drinks and others. Okay, and so we can see here that we've got 25 basis points expected from the Fed. But again, That's already priced in. It's going to be about the rhetoric going forward. And then we see that the euro strengthens to a 7-week high, right? So we've been moving up. We've been talking about this for several weeks now with the euro gaining strength. The rhetoric was hawkish coming out of the ECB, and then they hiked rates by 50 basis points. Okay, they during the ECB conference, it was very important, in what Lagarde said, and we'll see if Chairman Powell kind of uses the same rhetoric in regards to the fact that they have different tools, right? So they're looking at monetary policy and price stability, but then also financial stability when it comes to the banks, looking at it as two different situations, and they have tools for both, right? So the financial situation, monetary situation, two different things, and they still, the number one, right, priority for the central bank is price stability. So we'll see what the rhetoric is like coming out of the Federal Reserve today from Chairman Powell. But euro strong, as we see with some of the pairs that we are trading, and then we look at the stock market, the European indexes, kind of cautious ahead of the Fed. That's typical. So that's where we are. All right. Any questions regarding anything fundamentally?
So Vinny.
Yeah.
So they were saying, I think what the Janice lady, she was saying that they've been advising, that for him not to keep increasing the interest rate, because then it continues to put all the banks in jeopardy because of for them not to be able to have to secure the funds. And so they were saying probably do a 1% and not the 25, because if they keep doing it, they're going to put us all in jeopardy. Do you think that has anything to do with far as with making sure the banks have their funds secured?
We'll see. We'll see. I just think that the fallout with the smaller banks, I think they kind of knew that was a possibility that was going to break. I mean, I know how the market reacts to it and the media reacts to it. But your larger banks in the United States, they've got more cash on hand than they really had before. Your JP Morgans, your Bank of Americas, they're holding pretty strong. I just think that when you raise rates at such, a fast pace like the Fed has, I think what's happening is what they kind of set out to happen. Like something had to break. You have to get inflation back under control. I think, maybe he might talk about use some rhetoric in regards to remaining data dependent. I don't know if he's going to talk about a pause going forward after 25 basis points. I'm not sure. So it's kind of a coin flip right now in which way he's going to go. I understand what Janet Yellen is saying, but there's going to be winners and there's going to be losers. Joy, we know that. So we'll see. We'll see. We'll see what happens. I don't think anybody knows for sure outside of the Fed. This is all a part of to get rid of the dollar and make money digital. I don't know. We'll see. I'm not one to lean towards those type of theories. I think the dollar is still strong. It's still the world's reserve currency. I know we may see dollar weakness. We may not, Carolyn, because if we move into a risk off, people need dollars. Right? People have invoices to pay. Your commodities are dealt in dollars. Risk off situation, the dollar can act as a safe haven. So we may see a correction, then eventually dollar strength. Who knows? Right? We don't know. So that's why we proceed with caution. But I do hear that type of rhetoric going around all the time. Been doing it for quite some time, and the dollar's still a dollar. The greenback's still the greenback. So we shall see. All right. So let's take a look at the technical analysis. Let's look at our dollar crosses, right? So we can see the Aussie dollar is kind of bouncing around, right? Overall from the higher time frame. been moving to the downside, but now we've got that corrective action going on, right? Euro USD, we know that the euro has been the biggest bull in the room, all right? Buying against the dollar right now. The pound, right, has gained some momentum and some strength to the upside. We'll take a look at that. We can see that our New Zealand US dollar is kind of mixed, right? We know what's going on with today at 2 o'clock. We'll see what's going on. Let's look at New Zealand real quick. Come on, take a look at the NZD USD. We can see the New Zealand dollar weakened past 62.5, retreating from 1-month highs as investors continue to assess the impact of global banking turmoil. And analysts hope though that the latter would expand to the Asia Pacific region. In the meantime, the market cautiously awaited the Federal Reserve's policy decision this week, in which the lender is expected to hike rates by 25 basis points. Domestically, the Reserve Bank of New Zealand raised rates by 50 basis points in a widely anticipated in February fixing. At its February fixing, the board cited elevated inflationary pressures, higher expectations, and tight labor markets as factors of consideration. So they still have kind of still the same thing here in the United States. Still elevated inflationary pressures, higher price expectations, and a tight labor market, right? Just like here in the United States. So they raised 50 basis points the last time, but we know that in risk-off situations, with concerns like we've had with the banks, we know that commodity currencies can take a hit, okay, in risk-off situations. So we'll continue to monitor that closely, but from a monetary perspective, that's where the New Zealand dollar is right now. So we'll take a look at that. So it's kind of going back and forth, right? And we can see here with the dollar CAD, for the most part, long, right? We've had a little bit of sell pressure, corrective pressure, but we know that the CAD has been under a lot of pressure, right? Oil prices are hitting lows, and we know that from a monetary policy perspective, the Bank of Canada is looking to not looking to, but they have paused rates. And then we can see that the dollar Swiss here, sell side, okay, pretty strong. And we've got a mix here through the time frames with the dollar yen. So that's all ahead of what's going on today at 2 o'clock with the FOMC. So that is the technical summary right now. And so we come over here and we take a look at the DXY, take a look at the dollar. So one of the things that I spotted on the weekly chart is this potential crown. Now, we have price moving to the downside here now. Last week and this week, we're kind of bearish to neutral this week. But, right, we'll see. We'll see what happens. We have not, right, from a technical perspective in this pattern, we have not reached that left tip of the crown. We may reach that, we may not, right? But we can see we're holding below this 12,987 level and moving a bit bearish there, okay? On the dollar, so we come and we take a look at the daily, right? As we zoom in on the daily time frame, you can see here again, right, where you have, right, that crown, and you don't always reach that left tip exactly, right? But we know we have the break of the low, and now we've had price pull back. Okay, so we're kind of just left out there now until we get the data from the FOMC regarding forward guidance. So we'll see if this continues to move to the downside, right? Or if we get a push up higher to retest some of these levels as a result of the news coming out of the FOMC. All right, we need a catalyst either way, so we can make moves on the dollar. Okay, any questions on the U.S. dollar? I don't know. Do I need to zoom out, Joy?
You know what? Never mind. It was me. I had the iPad underneath my arm. I didn't know it could do that.
Oh, I got you. Okay, so we're good. All right, appreciate you. So that's where we are on the dollar. All right. Any questions in regards to the U.S. dollar? All right, thanks. Okay, so Let's take a quick look at the dollar pairs. Real quick. So we'll take a look at the Aussie dollar weekly chart. Okay. So we move sell side right off this 61.8. Nice bearish engulfing candle there. And we've pushed down. So we're at this 66.29 level. Got a little bullish activity. All right. So potential down retracement zone. Right. So here we are off that high. Right. So this seemed like a long time ago. We had that double top and then we moved down. Okay. Stochastic, right? Momentum to the upside may be slowing soon. So we move down through the lower time frames. This is where we are, right? So it's been pushing out of this 80-20 zone, okay, and trying to move to the upside. All right. So this is going to be an interesting one to watch today with the meeting at 2 o'clock this afternoon. So we've gotten the swing. We haven't got the 4-hour 382 yet. Right. But we've made a move out of this zone. So if you're trading this to the upside, just manage your trade. All right. So it is making positive gains, right? It's bouncing around, okay, which is kind of expected leading up to a major news day. But we'll see, right? But from a technical perspective, it is in our 80-20 zone and it is making moves to the upside. So we're above that 66.29 weekly level, and we seem to be making some positive gains right towards that 382. Okay. Yeah, that's where we are on that. If we come and we take a look at the one, right, just that same similar price action is choppy, but it's making progress to the upside. So we'll see. Now, we always say, hey, there's no technical structure that'll ever stand in the way of a strong fundamental occurrence, and we could have that. We could have that today. So just be cautious. All right. So there we are. That's the 1 hour. So we're looking at technically a down retracement zone. Okay, a down retracement zone. Any questions on the Aussie dollar? All right, so let's take a look at the euro dollar. All right, we know the euro bulls are out, right? So from a weekly perspective, we found support 104.83. We've been pushing up ever since. Okay, long-term stochastic on the weekly, okay, is in the buy zone. All right, we come to the daily. All right, we got pretty much a triple bottom at this 61.8 level, daily support at 105.36, and we're moving up. So we're running into this 108 level ahead of the news. Okay, on the dollar, here we zoom in on the 4. Okay, and we can see that level. And this is your deep correction on the 4-hour fib. Okay, so we came into that 86 level. So if price wants to continue long, somebody tell me what our target is on this 4-hour fib. Beneath, thank you, the 1.18, right? Which is at 111.31, right? So we'll see how that plays out. So if you're playing this as a 4-hour swing, right? This is your target. Okay, right here. Okay. So for people who may be playing this swing, you always have the option to put your stop below the C or below the A. Here. So this is how you would set your trade up. Okay, if you're stopping below the A, you look to enter 61.8, 61.8 levels, 786 levels. Okay. So if you enter at the 61.8, you've got drawdown. That's all right. As long as it doesn't take out the A, it has no choice to go your way. Right. You can see that if you enter at the 61.8, what at this point in time in this zone was your C. If you put your stop below your C, you get stopped out. If you put it in the zone, right? Because they had more room to run to the downside. Okay. So you put your stop below the A, give it time to float. Right? Always like, hey, my second level that I'd like to take within the AB boundary is the 786. And you can see how it swung. You had drawdown on your 61.8. We don't worry about the drawdown. Our risk management is stellar. Now, so you take your 61.8, you got drawdown, your trade gets picked up at your 786, and now both trades are in profit. Okay. And now the only thing that you change is my take profit level because we got the deeper retracement to the 8.6. 8.6 to 1.18. Okay, smart trader, super easy. It's color coded. All right. So that's ultimately the target if this trade idea is going to work out. So if I'm playing this off the 61.8, okay, that's my risk. This is my TP level. Like that. So at the 61.8, my risk on this trade, let's call it 230 pips. And my TP at this point is 430, right? Right. Call it 435. Right now, at my 786 level, here's my risk. So my risk at the 786 level, at the 86 level, I'm sorry, 786 level. Call it 135. Okay. And because we came to this 86 level, right, we pushed deeper, our TP is to 1.18. Right. Call it 520. Like that. Right. And questions? All right, so everybody's got it? Simple, easy to understand?
Yes, sir.
Okay. All right, cool. So that's where we are, right? So when we so when we look at something like our right, our Euro New Zealand that we were trading, okay? Right? So when you look at the setup there, okay? Similar scenario, right? Stop below the C, below the A. Okay. Same thing over and over again. Same thing. Okay. Just follow the process. Do your top-down analysis. Hey, try to determine your technical bias. Okay. Technical and fundamental bias for the pair, right? So if we look here on this position here, okay, stop below the A on this previous fit. Right. Move this out of the way for now. So over time, right, you'll build confidence in holding a position. Okay. That's something that doesn't necessarily happen overnight. Okay. But if you keep at it, you'll get there. Okay. 61.8 pullback, 1.618 projected D extension. Okay. Now we all see visually that it just didn't get there in one move to the upside. It moved in waves. Okay. So here, okay, call it 175. Call it 175 there, and to that D extension off to 61.8. $508. Okay. Okay. So using the fibs, right, sets you up. Direction, where to get in, where to get out. Okay. It handles all that for you, right? When you use them in this manner. Okay. So that's 175, 508, right? That's a good risk to reward. Okay, it sets you up. Right now, we you have to do your own research on that, Carolyn. There's a lot of good ones out there. You know, whenever you get to the time, we always just urge people to try to find some consistency in their trading first before they do it. You know, before they do it, whether you're in a demo trading, you know, or you have a small account, large account, just try to find some consistency in your trading first before you go and put the money up for a prop firm if you feel like that's something that you want to do. And the reason why we say do your own research, because you have to decide what type of trader you are. There are some prop firms that are, you know, better suited for day traders and scalpers. And then there are some prop firms that have rules that are suited pretty good for your swing traders, right? So you have to think about those things. If I'm a swing trader, you know, what's my leverage? Can I trade around news events? Can I hold trades over the weekends? What assets can I trade? So there's a whole number of things that you have to do the research on, and they're all pretty transparent on their sites in regards to what their rules are, what their regulations are, and what they allow and what they don't allow, and the type of leverage and their scaling plans and things like that. The one thing that you have to realize as a trader for a prop firm is if that they say you will be able to manage $100,000, right? But your maximum drawdown is 10,000. I don't even know why I put them. I can just put that in there. It's 10K, right? How much money are you really managing? Can somebody tell me? $10K, exactly. So, so when you say that I'm going to risk, uh, and those are two good ones, Reese. If you say that I'm going to risk 1%, I wouldn't be risking 1% of 100,000, right? Because that means I only have 10 trades. I hope everybody follows me on that. Okay, if they give you a $20,000 account and they say your max drawdown, so they say, hey, we'll give you 20K, and your max drawdown is 6%, right? You are managing $1,200. Okay. Think about that. There's nobody out here in the financial world that's just randomly giving people $20,000, $100,000. Right. So we have to be realistic, everybody. So then you have to decide. Yeah, you said you found that out the hard way. Yeah. This is more your marketing piece, your draw, right? So you know, this is more your draw for marketing, right? Purposes, but it represents sometimes with the prop firms the type of leverage, right? So you have to look at the type of leverage, all right? But this is what you want to manage that from, right? And then they may say your target is 8%. Is 8%. So think about that. So if I have a 20K account and my target is 8%, right? Or 7%. Okay. So they may say your drawdown is 6%. Your target is 7%. You need to make 7%. Well, that's $1,400. Think about that. So 6% is, hold on. Now, if you realize this, you could do some damage. And a lot of times you do find out the hard way in the beginning, but that's okay. Right? It's all about the journey and the process. So the target is 14, so it's 7%, that's 1,400. So that means you need to make over 100%. Right? Everybody follow me on that? Yes, no? Drop me a 1 in the chat, something.
Yep.
Okay. Right. So the next thing you need to watch out, you need to look out for is what's my time frame? Right. So because if a prop firm is telling you, hey, we're giving you $1,200, you pretty much need to double that. Well, oh, by the way, your leverage is 1 to 10 or 1 to 30. And this is why Ryan always talks about trading small and compounding over time, because we've been through it and we've learned, right? A lot of us have. You see what I'm saying? So you, right? They may say you have 6 months or 12 months, right? As one of them just adjusted to. So you've got 12 months, but we all psychologically get in this rush, right? Because they say, well, if you hit this target, right? If you hit this target at 7%, then we're going to double your account to 40K. So everybody gets in that rush to try to get to make that $1,400, and you blow it because you become over leveraged. But they're giving you 6 to 12 months, but you're just like, you start to pull everything else in, right? I got bills, or, I got a vacation I want to take, or, whatever, or I want to get out of my job as soon as possible. And then psychologically, boom. Now we end up in a massive drawdown. And now over time, right, I start to feel pressure because my time frame is running out. And then I over leverage even more because I'm trying to hit that target. That's not the prop firm's fault. Yep, you have to learn to manage your process. So then what you have to think about with these prop firms is, okay, that's cool. So then you have to think, ultimately, I will use them to funnel money to my own account, because then they're going to take a percentage of that money, right? So they may charge you $400, depending on the type of account you go for. I say 250, anywhere to 250 up, right? $250 up to enter it in. So for this one particular account that I'm using, it could be like $800 or so, to try to do it. Well, I'm 800 in the game. I'm 800 in the game. So say you pay $800 or whatever, 450 to get in. So let's use this example of $800. Okay, to do it. Now, oftentimes people in the beginning, mainly because of what I'm talking about, they may fail, which that's fine, guys, right? Fail forward, learn from it. You may fail once, twice, 2, 3 times, right? It is what it is. There's nothing to be ashamed of. You're in the arena. That's what you have to understand, okay? When most people aren't, all right? Now, if you pay that money, you have to think to yourself, if I'm paying $800, I get to my target, I hit 1,400. They're only going to give me, some prop firms, 50% of that. So you hit that target, they're going to take 50% of that. So I'm getting 700 out the deal, right? Now, over time, it can pay off, but you have to think to yourself, would I be better off doing this and getting it going and slowly funneling money to my own account? Or would I just be better off? It depends on the position that you're in. If I can afford to pay $800, $400, would I be better off just putting that in my own account and building over time? Does everybody understand me on that? Because if I build my account to 20K, right? I have, if I could over time put enough money in my account to get $20,000, guess what? Now when I trade and I want to take 1% of $20,000, right? I'm risking $200 per trade, right? If I build my account, my own account, if I'm trading my own $100,000, right? 1% of that is, now I'm at $1,000 per trade. Because it's my money, right? It's my money. Now you can still set up drawdown rules for yourself, but you don't fall into this game, right? You don't fall into this game because now I've got my whole $100,000. I really could take 1%, right? If I want to. So it just depends. The prop firms really can teach you how to be a really great manager of money, but you could take some of these rules and apply them to your own account as well, right? To develop that discipline. So when we talk about a trade plan, you can literally go to some of these prop firm sites and look at their rules and like, you know what? I'm going to adopt those rules for myself. I'm going to adopt those rules for myself. So maybe, if I have $100,000 account, and I lose 4 consecutive trades, right? Those have been with us for a while. We talk about the 4 consecutive trade rule way back in the beginning, but then maybe I cut my risk in half, or I cut it down to a quarter until I build back up and start winning some trades. So there's all types of things that you can do, but you have to keep that in mind, because if you go through and you lose, even if you pay $400 per shot, could that have been money that I could have been putting in my own account, and building it slowly, right? But none of it matters if you haven't found any consistency yet in your trading, right? So that's why we always urge people to try to find some consistency in the trading. Try to make sure you get that edge, right, over time. Okay, so that's what I would say. I appreciate you bringing that up, Carolyn. Reese, never driver only pays 50%, right? Right. But you know what, Reese, though? Some of them are instant funding so you don't have to go through any trial periods, right? Oh, pass this first level, second level, then you get the account. And if you do that, then we pay you a higher percentage. Some of them are like, boom, you put the money down and you can start trading right away and getting a profit split. I know there's one where it's instant for real. Like, you can, like, after your first week, you can start getting profit splits where, for my Forex funds, whereas like the fivers, they want you to first hit the target, that first target, and then you go on from there in that instant funding program, right? But then you have to look at those. I know for my Forex funds, you could do that with them, but you also can't hold trades over the weekend, right? Now, if they allowed you, if they had that instant funding type of setup, and you could hold the trades over the weekend, we'd be in business, right? I take drawdown rules, right? So they're all different. Like I'd take a shot at that in a minute. I could go in and trade right away, and I can hold my trades over the weekend. These swings, I'll take a 50% cut, because you can, like I said, you can leverage that. You really could turn it into a business for yourself with these different prop firms, right? Where you're trading for the different prop firms, you're taking your splits, you're adding it to your own account. Now you're really building a good, solid portfolio for yourself. But I would find the ones, can I hold over the weekend? That's me as a swing trader. Can I hold over the weekend? And I'm just gonna trade small. And if it takes me the entire 12 months to hit that level, then that's what I'm going to do. Because over time, if you set yourself up on a 3 to 5 year plan, you start hitting those levels. Because as the amount grows, your drawdown amount grows, right? So some of them, you may eventually get to the point where your max drawdown is like 40K. Well, you could do some damage with that, because now I'm trading a 40K account. So my point in all of this is always look at what your drawdown is. Some of them have a daily drawdown. Some of them have a max drawdown period. You should never get tagged on your daily drawdown, right? But I always focus on, when I look at those, what's the max drawdown? Because that's really what the account size is. Because if you go beyond that, it's over. Like, let's not play any games about it. You blow past 10K, you can forget about it, right? So if you think 10 cents, if you think 10 cents per thousand, when you have a 10K account, you probably should be trading at 1 mini lot. That's a little nugget there. $1. If I'm thinking 10 cents per thousand, if I got 10,000, I'm trading at a dollar per pip. And if I'm swing trading, I'm doing damage, right? I just made 508 pips. at $1, that's $500, right? This goes 550, that's 550. That's $550. So you could do some damage with a mini lot, right? 0.01 is your best friend. That's right. So, all right. So that's that. Good conversation, everybody. But you know, gain some discipline, right? Gain some discipline first. Is my biggest recommendation. Any questions about that conversation at all? Great input in the chat to everybody. Yeah, and Reese, you've been with those prop firms for a while, eh? Reese, yeah, yeah. So, yep, yes, yeah. Talk to Reese. So, for sure. So that's where we are on that. Let's take a look at this pound dollar setup. But yeah, that's the key. I don't knock, any prop firm. I think it's up to us to do our due diligence, you know, to learn the rules, right? Because you hear people, oh, I got bamboozled, I got had. It's, like it's all risk management. It's all risk management. So let's look at this pound, right? We're moving bullish. Okay, found support again, right? 118, found support, we're moving up. Okay. And we've got a rate statement for the US today. We've got a rate statement for the UK. So moving up here, we came right into that 382 and it's been pushing up ever since. Starting to lose a little bit momentum to the upside for this in regards to the stochastic. Okay. So if we come here to the 4 hour, that kind of makes sense what we just saw on the daily, right? We come into a D extension here off this leg, right? I pull it off this leg. So we're at a D extension right in this 122 zone. That's stochastics in the buy zone. We got some stochastic misalignment. But here was the crown that we spotted a long time ago that has since started to move, right? So we're bullish, okay? Not looking for any buys. We're just strictly going to observe these ahead of the FOMC. And we know we've got the rate statement for the UK tomorrow, but this is pushing upside. So we're just checking in on these to see what our overall direction has been. Okay, so this is moving. This didn't come back to meet that left tip, but picked up around that 382 and it's moving to the upside. So if we look at this this sub fib here, take this crown off. If we look at this sub fib moving, right, you've got a beautiful ABCD move here. Okay. So that's a wave, right? So from a technical perspective, right, that's moving, right, from a C to D right now. Okay, so you look at, do the same thing over and over again. If it comes into my zone, my stop's below the A, we'll call that, is that 75 pips or so. That D extension is 206 pips, right, off that 61. So that's how we play the game, right? So that's why we like those deeper retracements, because it sets us up, right? So this is not magic at the 61.8 like we sometimes hear. Our philosophy here in the Forex trade room is that those deeper corrections put you in a better risk to reward situation, right? Where you can put your stop below the A, right? And let it float and do its thing, divide your risk by your stop loss. Okay. Now you can always, right? We always say you do it, you have the option, right? To put your stop below that C. We just know that price, we don't control it. It could turn over and go deeper, right? We know that. So then you get stopped out. If you're cool with that, fine, right? You have to have a certain type of psychology to run those tight stop losses and get stopped out over and over again. And then you hit that one runner that makes up for all those losses, okay? There's people who trade successfully that way. So if you put your stop below your C, okay, like that would be your C, your deepest point within your AB boundary. Right? And then maybe you start dropping, trend lines or what, to see, hey, can Can I get a trend line break? Right? Just gonna draw these real quick. You know, can I get a trend line break to the upside? Okay. Maybe you go down to the 15 to get the tighter trend line, right? Your 15-minute, your 5-minute. Once I come into that zone, that buy zone around that 61.8, maybe I drop my trend lines. And if I get that swing low in the break, you see that there? Then I take the trade. So now my stop loss is tighter. Right? Or you could just trade smaller. Again, divide my stop loss, divide my risk by my stop loss. Okay. And just give your trade room to work. Any questions on that pound dollar? You learn to be more patient with the process and not rush to get the bag. Oh yeah. Well said. And that those type of, it still creeps in from time to time, right? Where we get in that rush. So no matter how many years you trade, you still get in that situation where you get that impulse to be super aggressive. So it does, patience does pay. So mindset is everything. Like I was watching one guy's stats, a trader, and his drawdown was crazy. Like, in the negative, but he traded small, but his return, he was up like 233%. So at that point, does drawdown really matter? You know what I mean? If you're a swing trader and you have a strong directional bias, he holds his trades. He trades small, he holds his trades, and his account's up like 233%. Like you can't argue against that. You just can't. That's hard to argue against, right? Letting those trades swing. Um, Once you find your flow in the markets, you want to do personal and your prop. Yeah. Trading, turning into your business. You can look at, if you're trading for prop, and then there's prop firms that allow you to have multiple accounts. So maybe you have, 320K accounts and you put them on a trade copier. So everyone that was taking the trades, and you just slowly but slowly but surely building. But do it small, because you will hit a point where you hit critical mass, and everything explodes to you. You get to where your drawdown, you continue to hit levels where eventually your drawdown is 30K, 40K, and you've got them all, you've got them sitting on a trade copier, and you with, multiple prop firms. Now, you've got a good business going for yourself. You pretty much look at that as multiple income streams, in addition to your own personal account. So that's some things to think about. There's some out there, Joy. We can, me and Ryan can get you some information. There may be some other people in the group that knows too. There's some good trade copies out there. But that's something to think about. So now I might have, $300 coming from here, $500 coming from here. That could become lucrative, but you can't have I just signed up today, I want it all tomorrow type of mentality. I already know, because I've been there. I'm always speaking from experience. So, um, you have to set out a long-term plan for yourself, because if you set out a long-term plan for yourself, trading in those small micros in the beginning won't be so frustrating for you, because you can see you have an end game, right? You have an end game. You can see the big picture. Yep. Social trading tools is a really good one. That's a really good one. So I think that's one of the best around right now. So yeah. So that's the pound dollar. Take a look at this New Zealand dollar. Kind of bounce it around a bit. Okay. And so we can see here, right? Okay. Lower lows and lower highs, we made a recovery, but we can see here that we kind of this now. Right. We need to get some type of continuation. We need price to make up its mind. Okay. Good recovery. Now we're just at this point where it's like, okay, what are we gonna do? We're gonna range bottom to top, or we're gonna break and continue lower now. So this will be kind of right tough to trade, right? So we see where we are. It's just it is what it is. It needs to make a decision. Break back above 62, 68, to get long. We got a stochastic in the sell zone on the daily. Do we break lower? We've got another support level here that I need to get caught up on now. So, right, you can see these levels coming in. It's pretty choppy. Right. So we'll drop these in like so. All right. It's all about the journey, everybody. When I was learning, when the chief at the Market Traders Institute, they say, look, set a 5-year plan for yourself. Set a 5-year plan for yourself. And I know a lot of times the way we're introduced to it, is kind of it's impulsive. The way the marketing goes and everything. But once you settle down and you realize, right, and you go through the fire, right, as they say, you start to realize that there's a longer game to this, and it is one heck of a skill set to learn. Okay, so we can see we kind of got this pause here, this action, right, almost kind of like a head and shoulders type of situation. We didn't quite get to that equal high there, but you could pretty much look at that as that, but we may break to the downside. So there's really, we need to wait. We need a catalyst, right? We always have those pairs that we look at every week where it's just like, all right, we need a fundamental catalyst, which we're probably going to get here today to kind of dictate where we want to go with this next. All right. So that's where we are on the NZD USD. Not too much doing. Not really in a tradable condition for me right now. Dollar Swiss, we know that it was moving pretty much bouncing around sell side, right? We can see from your technical summaries, it's got as a strong sell, and we can kind of see why, right? Coming off the higher time frame, just push, but we can see it keeps rejecting this level, this 90-60 level. This week we're bearish, okay, and this is the daily, right? We don't have a 382 yet. This has been quite a funny pair, just range bound, right? There's better pairs to trade, really, but there's days where you can do some damage with the dollar Swiss. Maybe today we kind of get a better idea. This move here, right? You can see why sell side on the lower time frames. We pushed up and we got stuck right at this 93.38 level, and we've been moving down, right? So let's just see what happens fundamentally today with the market to see where it can get us. And we'll take a quick look at this UJ before we wrap things up. Right. There we go. So this one I'll just come down here as a possible crown drawer, kind of just like the DXY, but we're pushing up off this level. So I am in a buy position that I based off the 4 right here. And I'm late on this one, but I put it in a small position to see if it wants to carry. I'm gonna hold that one through the fundamental announcements to see what happens. So it's either gonna move in my direction or it's gonna push down further in the zone. But when I saw this U-turn, this bullish candlestick right here, I said, all right, I'll take a shot at it. So the 80-20 played out on that beautifully to the downside through 2 TP levels. And now we've got a reversal off this 8-6. So we'll see if that wants to continue long. Monetary policy perspective with the yen. not really seeing anything in the way of a change monetary, in regards to monetary policy, the dollar. We know we're going to get 25 basis points today. We'll see what the rhetoric is moving forward. That's probably going to determine which way this setup goes. I did put in a long position on that dollar yen to see what's going on. I didn't catch it as deep, right, based on when I saw it, but if it moves to the upside, that'll be a good one. Look to add to it later. So just dipping the toes in the water on that one, and that's the dollar yen. Any questions before we wrap things up? Good advice, Reese. Good advice. No questions? All right. Well, awesome session, everybody. Hey, let's do my best to get a pretty busy day lined up today. But if I get that, if I get time, which I should have a moment to do that around 2:00, to put the link in the Discord, right? So for anybody that wants to hear Chairman Powell when he starts to speak, you'll have access to that. You can always just go to YouTube as well. But all right. With that being said, see everybody tonight, 9 p.m. Eastern Standard Time. Have a good day, everybody.
Thank you. Have a great day.
Appreciate it.